This is the Friday, June 3rd, 2016 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
Now, we talked on the program about how this particularly old crop soybean rally is crazy. You called it a Seinfeld rally because it's really a rally about nothing. We didn't get a chance to discuss this bean meal market, which has been a driver of this thing, caught a lot of end users off guard when it started to take off. How does a meal buyer handle this kind of a volatile market?
Well, I think if you're not in this market yet, you might as well stand aside because the upside from here is fairly limited. The thing that's bothered me and been a little confusing by the meal rally is that the meal base has been the worst meal basis you've seen in 4 years. So normally when you see a meal rally that pulls the market up, it's because there's a tightness in meal. You can't get your hands on it. Well, there's meal everywhere. There's no problem finding any meal. Matter of fact, there have been weeks when you could import Chinese meal into northwestern U.S. cheaper than central Iowa meal was. So I mean, it's once again it's a little confusing because the theory, I guess, is that South American crop being reduced, they're not going to be able to produce the meal, so we don't have the competition from them. But export meal exports were mediocre, right in the middle of the range when they came out on Friday morning. So there's nothing there that was get you all riled up about buying meal. So it's a somewhat similar story to what it is in the beans.
Now, in the beans on the program, you mentioned the funds position and how they've changed from being a record short just last fall to a record long. Talk about that a little bit more.
They took out their ownership took out the record ownership that we established in 2012 and the drought by 15 to 20,000 contracts by a lot of estimates. So, I mean, they have a record long bean position. At the same time, we basically have a carryout that's 3 times what it was in 2012 when we thought we were going to run out of beans. South American production's way up from what it was in 2012. So, I mean, obviously, Chinese demand is too. But still, they've got a big long position. They've got a huge long position in meal as well. The thing that bothers me about that is when they start to get out of that, who are they going to sell all those contracts to? Who's going to be standing there wanting to support that? And I just think we've all experienced it where it seems like it takes forever to a market to go up and it goes down really fast. Well, this could be really fast in spades once they decide they don't want to buy it and decide, maybe I'll sell that to somebody. It's going to be a problem.
Now, from a technical perspective, on old crop beans, is there an area of resistance that producers should keep an eye on as a potential start to their selling?
Well, everybody had their eye on 1160, and we surpassed that on Thursday night's overnight trade and got up to 1169. So we've satisfied a lot of those. I guess the next one that people are starting to talk about is 1240.
Okay.
So another, 60 cents up from that high, quite a bit high, almost $1 up from where we ended up closing on Friday afternoon.
All right. Interesting stuff. It's been fascinating to watch this rally.
Yes.
But we do have questions from our loyal followers on Twitter and Facebook, and this first one is from Gary at Gary G. Vetter on Twitter. And Gary says, my wheat was a rust bomb, so he chopped it. Should I re-own wheat on the board?
Well, if I'm correct, and there's only another 20 cents up, maybe 5.20 on beans, I'd say forget it and start moving on. I look for your next selling opportunity. I just think you're going to add insult to injury by buying wheat up here, especially with the abundance of wheat around the world. I wouldn't want to do that.
Now, given all the rains that we're seeing, not just domestically over Texas and parts of Oklahoma, but even in Europe, are there wheat quality concerns developing in that market?
There probably are. I'm not saying the wheat market, wheat couldn't be skimmed back a little bit. I'm just saying there's so much wheat in the world that I'm not sure it makes all that much difference.
Okay.
And the problem for corn is this feed wheat has gotten cheap enough that it's competing with corn. More so in Europe, we don't use wheat as much here in the U.S., but Europe uses quite a bit of it, and so any sale wheat takes is a corn sale you're not going to make.
Okay, so might help draw down some of those burdensome wheat stocks at the expense of corn.
Yeah.
Okay. We've got another question. This one is from Twitter. This is from the Trinity Ranch in Arkansas. And they are asking, what is going to turn this cattle market around? They say it doesn't make sense for this market to be this low. Higher feed costs should send cattle higher, right? Can we get back to $1.40 live cattle and $1.70 feeders?
Higher feed costs should send cattle higher. That's kind of ignoring the fact that we've been expanding, that the cow-calf man has been producing calves like crazy. So we've got more numbers coming at us. Now, I understand what he's saying a little bit in that high feed costs tends to make for lighter weight cattle, and we talked about that on the show. So in that respect, it probably is. But we did rally this week, and like I said on the show, there is some more upside potential here. But you don't want to get yourself all wound up that we're going too far, because we're going to have more numbers coming at us. Plus, what about the fact that unemployment was low, but that's a hokey number anyway. But you've got wages are stagnant. I just don't see how high-priced beef gets used very well. I mean, the top end of the people are going to eat the beef. And when I was on that panel here a month or so ago, Naomi made the point that people like to eat beef because it's a premium product, and she made a very good point. My argument to that is that's true. They just aren't going to eat it as often, is the problem. So, yeah, there's upside, but I wouldn't get too carried away on it.
But it's not $1.40 fats or $1.70 feeders.
I absolutely do not believe that. I mean, maybe 129 on the fats, maybe 150, 55 on the feeders.
Okay.
But I don't see those kind of numbers. I mean, you can never say never, but I'd really be surprised.
Okay. Before we let you go, I wanted to talk a little bit about corn demand and the ethanol market in particular. This is the time of year we should expect to see ethanol production increase. Is it starting to happen yet?
It's barely starting to happen. Historically, they take downtime from late April through middle of May, and then they start to ramp up for the summer driving season. We've seen stagnant weekly production really until this week was the first week we saw production up at produced 282 million gallons of ethanol. A year ago, we produced 286, so we're kind of up at those levels. But we need to see those kind of strong numbers through the summer in order to meet the USDA's projections. The disappointing thing was, particularly this week, was we saw a really big drawdown on gasoline inventories. But the ethanol inventories came in unchanged, so that is a little bit bothersome. Ethanol prices are a bit above gasoline, so that kind of hurts the blenders a little bit. I don't know. I think the USDA is probably spot on their estimates, and I don't really see any change in the report next Friday.
Okay. Now, Tom, finally, we have gone back to trying to find ways to educate people that are new to the markets. And I wanted to ask you a question about the options. And my question to you is, what is a put and what's the advantage to using one?
Well, I talked about using the puts a little bit on the show, particularly as it related to the beans. There's several things a put does. Number one, what it is an obligation to make a sale. In other words, if you say, I want to buy a $10 put, you're buying the right to be short beans at $10. So, and you pay a price for that, and you pay a set price for it. If beans are above $10, you just sort of, that's like an option on land. You say, I want to buy this piece of land I'll pay you $200 for an option to buy it at $3,000 an acre. Well, if the price of land goes up, great. If it doesn't, you got it. I mean, it's the same principle. So the advantage is, number one, you've got a set cost. You know what it costs, you know what your risk is versus the futures that are, theoretically unlimited risk. And you can use them in all sorts of ways. You can roll it up to a higher strike price. That $10 I referred to is what they call the strike price. So there's a ton of flexibility. The downside is that there's an expense to it, and when you get more volatile markets, the expense goes up as you would expect. So those are sort of the trade-offs. You're getting a known risk for a price that you know what it is. But you're giving up some things too.
So you're buying the right to sell.
Correct.
Yes.
Which really is hard to get your mind wrapped around if you haven't used it a lot.
Yeah. And if I'm buying puts or calls, can I get a margin call?
Absolutely not. If you're a buyer of a put or a buyer of a call, it's that cost and it's set, and what you pay for it, and it either works or it doesn't work.
Right. Worst case is you lose that money.
Where the risk comes is if you're on the other side of that transaction and you're the seller, then you're back to having unlimited risk. So, everybody asks, well, how can I buy that and there only be a limited risk? Well, because the guy on the other side of that is assuming all the risk, which is again part of the reason that they cost a fair amount.
That's why there's a premium.
Right.
Well, Tom, thank you so much for joining us this week.
Thanks, Mike.
And thanks to all of you for watching Market Plus. We appreciate all of your questions. And if you believe in this service that's been provided each and every week for the past 41 years, go to iptv.org/market-to-market and click on the donate button on the top of the page and help support future editions of this program. Thanks for watching and have a great week.